All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Wednesday, everybody. Today's February 12th, 2025. Happy Inflation Day. Today we got CPI, CP. Oh my God, what just happened? Inflation. Go figure, guys. We're still slightly above the Fed's arbitrary 2% target. Inflation is on the rise. It was a miss high by virtually every category, higher than expected, higher than last month. And it was not any one thing. It wasn't core inflation. It wasn't just energy. Everything came in higher than expected. There was a couple of outliers in the chart, but guys, in general, inflation is just sticky and it is virtually across the board. Shelter still won't go down. Transportation services surging. Energy took a big change higher last month. Food got more expensive. This is pretty widespread. Let's get into some of the numbers, shall we? Headline CPI, 3.0%. That is above the expectation for 2.9% and higher than the 2.9% we had last month. So we're back to that 3 handle, and the market did not like that one bit. Now, here's the thing, guys. We are not only moving higher, but we are accelerating to the upside as we move higher. The month-over-month headline inflation number came in at 0.5%. That's the highest month-over-month number we've had in a while. That is versus expectations of 0.3, and it is up from 0.4 the prior month. Now, it's not just the headline number that's a miss. Core inflation, which strips out volatile food and energy, 3.3% year over year. That is higher than the 3.1% expected and up from 3.2% last month. So it's not just food and energy. It's not just core inflation, guys. It's everywhere. On a month-over-month basis, 0.4%, higher than 0.3, up from 0.2. Guys, it's everywhere. And look, the market is now having to reset expectations already. I mean, we had a lot of testimony from Powell this week in Congress, and he was saying the Fed was in no hurry to cut rates further after being in a gigantic freaking hurry to cut rates last fall. Now they're in no hurry. Now inflation is moving in the opposite direction that it's supposed to, even though the Fed says we've made substantial progress and we believe over time we can move sustainably towards our 2% target. All that mumbo jumbo and that empty rhetoric that they feed us on a monthly basis at the FOMC. But now the market is having to adjust expectations for the possibility of fewer rate cuts this year. And the market has already adjusted those expectations way down. A few months ago, the market was expecting 5 or 6 rate cuts this year. Now we're down to 2. Maybe just 1 after this report. Look, the Fed is not going to lower rates, guys. You're not going to cut when inflation is moving to the upside here, unless there's some kind of massive deflationary asset event happening, which is entirely possible. We could get something like that. But barring that, the Fed is pretty much going to sit tight here. And so rate cuts, all those people, you're going to have to adjust those expectations. Now, all the while this is going on, while we're looking at all this inflation moving in the wrong direction and all the implications of what that means, and the bond market is moving and the dollar is surging, just about every asset is selling off at this point right now. The Dow dropped 400 points in the blink of an eye this morning on this report. Guys, pay attention to what's going on with gold. This story has been, the gold bugs have been paying attention to it, but I think the mass market audience, if you will, has been just kind of noticing it out of the corner of their eye, casually paying attention to it, like, oh yeah, that's interesting, but not yet really piling on the story, not really screaming about it from the rooftops, as opposed to what we had in 2021 during the silver squeeze movement, when it was like, oh yeah, smash the COMEX, buy all the physical. What we're seeing right now is totally different. And I still, to be honest with you, I don't really know what to make of it. And I've been very hesitant to cover this story because there's so much misinformation out there, and there's so many people that are just trying to sell you gold bars by scaring the crap out of you, that I don't really know how to cover this one accurately. But let's talk about what we do know, all right? Gold is leaving London. Gold is leaving the Bank of England in huge amounts. Whereas it was drained the COMEX in 2021, now it's the COMEX draining the Bank of England, or draining the LBMA. The metal is flowing from Europe to the U.S. Now, the story, the cover for this is that it's because of tariffs. And maybe that's what set this whole thing in motion, was people wanted to get the gold into the States before the tariffs hit. but it's almost taken on a life of its own now. We've got other things are happening besides the tariff worries. We've got metal leaving ETFs, ETF outflows. Even though the price of the metal is rallying like crazy, the ETF's value is falling, the total market cap, because authorized participants are redeeming shares. They're taking physical possession of the metal. And so you've got fewer shares of the ETF, even though the underlying metal is getting more valuable, right? That is a run on physical gold happening in ETFs. It's not at an alarming rate, but it is happening. You got this hilarious talking point that we got. Somebody in the overseas in London was interviewing people at the Bank of England, and they were saying, like, how do you explain why it's taking 6 to 8 weeks to get metal out of your vaults when it typically only took 2 to 3 days? And, this muckety-muck British guy goes on this long-winded tirade about how, oh, don't worry, we can meet the redemptions and this and that. And I understand when I came into work today, it took me longer to get in the door because there was a lorry in the bullion yard. And I just couldn't help but thinking, a lorry in the bullion yard. Talk about a great title for a horrible book. I mean, it just bore the hell out of you. I mean, okay, yeah, a lorry, if you don't habla British, that means there was a truck taking gold out of the vaults. And that was like this guy's explanation for why everything is fine at the Bank of England. Oh, because there was a lorry in the bullion yard. Okay, that's an interesting story, saying nothing there. We got people are rumored that the U.S. might go on back on the gold standard. I saw this one floating around. Look, guys, I have 0.0 confidence that the United States is going back on the gold standard. Don't threaten me with a good time. I would love to see it, but it ain't happening. Donald Trump is a debt spender. He is an inflator. All right. I saw this story. It's being reported often enough now that I guess I have to pay attention to it, but it's just not happening. We've also got this story about gold revaluation. Now, this is interesting because the United States has a huge stockpile of gold, allegedly. We haven't audited it, but we're storing this gold at something like $40 an ounce right now. That's what we hold it on the books. Now, everybody's saying we might be revaluing that gold. And, what does that mean? Could gold go higher? Well, not directly, no. We heard Scott Bessent and Donald Trump both made some phrases recently or made some statements about monetizing the asset side of the U.S. balance sheet. And we've heard about this sovereign wealth fund idea, which I was very critical of initially. So when I see monetize the asset side of the balance sheet, and then I saw this Peter Bachvar interview on CNBC yesterday, and everything kind of fell into place. All this gold revaluation is a money printing scheme. If the United States Treasury revalues the gold on their assets, on their balance sheet from something like $40 to closer to $3,000, which is what it's, pushing the value of now on the open market, all that's going to happen is the Federal Reserve is going to deposit something like $800 billion in the Treasury general account. That's it. They're not going to actually sell the gold. The gold on the spot market is not going to rally in price, at least not directly. The Fed is going to deposit a huge amount of money in the TGA. Now, where's the Fed going to get that money? Well, we create it digitally. That's where they're going to get it. They're going to print it. So gold revaluation is just an inflationary money printing scheme. That's all it is. And it's also a way Donald Trump might circumvent the whole debt ceiling debate that's coming up in the next few months. If he revalues gold and they deposit $800 billion in the TGA, well, maybe that buys him 6 months to a year before he's got to get the debt ceiling solved. So it's really just another money printing scheme. More inflation is what that one means. And last but not least, on the gold story, there was a story yesterday. The South Korean Mint is no longer selling gold bars. Why is the South Korean Mint not selling gold bars? Because they can't get gold. Oh, that's kind of big. And National Mint is cutting off sales because they're having trouble sourcing the metal. Well, where would the South Korean Mint get their metal? Probably from London, probably from the Bank of England, where everybody else gets their metal on the LBMA. And if the South Korean Mint is having trouble getting metal, and there's a lorry in the bullion yard keeping this guy from getting into work, and the COMEX is draining all the metal into the States, are we looking at a run on physical gold? Is that what we're seeing right now? It's starting to look like that. I don't want to get too hysterical about this because, again, there's so many people that are going to use this to try to get you to buy small denomination physical metal. All right, they're salesmen. They are trying to collect premium. Right now, the physical market for gold is not very good. If you're trying to sell your 1 ounce gold bars or your 10 ounce silver bars, you're not getting spot for it because the dealers are swimming in inventory right now. nobody's really buying the small denomination stuff. The premiums are very low. And so you can't even really get spot for your metal when you go to sell it back. Now, interestingly enough, these dealers are now sitting on massive piles of inventory. And what does a dealer do when he's got all that inventory, all that exposure to gold price? Well, he hedges the inventory. So he typically would do that by shorting gold on the COMEX. Now, that's interesting because now you've got gold dealers who are short gold on the COMEX, but the price keeps moving up, which means those shorts are losing money. But their long end bet, the inventory that they're holding, is not really going up in value because the physical market isn't doing so well. Gold dealers are actually really hurting here. This gold market is messy, guys. Be careful. There's a lot of weird info out there. There's a lot of incorrect info out there. There's a lot of people drawing incorrect conclusions based on what's happening. I'll be the first one to tell you I don't really know what's going on. All I can tell you is it is a mess. And, well, I like the shiny. That's my take on what's going on in gold. Also, big decision in a lawsuit involving Thomson Reuters and artificial intelligence. You don't want to miss that one. Kraft Heinz earnings were out today. Apparently, ketchup is becoming a luxury. All you people who don't realize how good you have it, even though you can't afford to put ketchup on your hot dogs. What's the matter, guys? It's the best economy ever. And CVS is showing signs of light. They just posted a big beat, or should I say a reduction in the losses in their pharmacy benefits manager business. Possible signs of turning the ship around over at CVS. That stock is rallying this morning. We've got a lot to talk to. So why don't we shrink my big melon of a head and let's see what's going on in markets. And if you don't mind, hit that subscribe button and that like button if you're new here, because we do this every day. So come on and have your coffee with the melon heads as we go through markets every morning. And look at the S&P right now. It is down 1.07%, 65 points to the downside. Almost all of that coming in the moments following the release of that higher than expected CPI report. We have got the Dow is doing something similar, off by 410 points or 0.92%, doing slightly better than the S&P. But once again, all of those losses came within a blink of an eye after that CPI. And the NASDAQ is leading the way lower, down 253 points and falling 1.16% lower. Stocks are taking a beating this morning on that CPI report. We'll see if that holds throughout the day. Meanwhile, the dollar is surging. The Dixie is up 42 basis points here at 108.35. Strong dollar, not good for asset prices. That's partially contributing to this sell-off across the board here. We are seeing the dollar is recovering a little bit here, or I should say, giving back some of those gains. Looking over at the bond market, we have got yields are higher across the board here, in particular on the long end. The 30-year Treasury, 4.841. That is 9 points higher. The 10-year, 4.643. That is higher by 10.5 basis points this morning. The 2-year, 4.363, up 7 points and change. And the 1 month is essentially unchanged at 4.335. So we've got the price of money is going up. Higher rates here. The market is adjusting expectations for central bank policy. Still got that lingering sore throat going on here. Looking over at the commodity side of things, not that bad, all things considered. Gold is actually seeing a little bit of recovery here. Gold was down more than $30 at one point this morning. Now it's off only $5, 0.18% lower here for spot gold at $2,892. So a little bit of a recovery here in gold, despite those higher interest rates and that stronger dollar. Higher rates and a strong dollar, typically very bearish for gold, because gold competes with bonds. But right now, gold is showing a lot of resilience here. And silver doing even better. Spot silver, $32.02. That's up 20 cents here, 0.2% higher. So the shinies are holding up pretty well this morning. We've got copper is up by 0.5%. Platinum is up by 0.5%. And palladium is down by about 0.3%. Meanwhile, WTI crude oil is at $72.19. That's down by about $1.12 or 1.5% this morning. Bitcoin, meanwhile, not doing so hot this morning, although it is also recovering some of its initial losses. $95,026 for Bitcoin as priced on Coinbase. That's off by about $700 from yesterday's value. Still trading below that 50-day moving average, and this higher than expected CPI. For the moment, not good for Bitcoin. Again, stronger dollar and higher interest rates, not good for alternative assets like gold and Bitcoin. Now, let's talk about some of these things that are going on in the gold markets. I saw this one. This was posted by a guy named Todd Son on X. He's saying one of the more interesting tidbits of this ETF flows table is outflows from precious metal funds. No love for international markets either. All right. So this is basically showing the direction of money flow in ETFs since November 5th, since election day. All right. So they're saying, bonds, spot Bitcoin, all these ETFs seeing a lot of inflows, stock funds seeing inflows. But the reason why I bought this one up, and I apologize for the small text, guys, I can't blow this one up, is right here, precious metals. And Todd is saying here, outflows for gold and silver since election day are odd to us. We're open for ideas. We've actually seen net outflows, about $1.9 billion of net outflows from gold and silver ETFs. Now, how is that possible? How is money leaving the ETFs when gold and silver prices have been surging since the election day? That is because of this run on physical metal. Remember, you've got authorized participants, i.e. the big banks, the big hedge funds. They're the only ones who are actually allowed to redeem physical metal from ETFs like the SLV and the GLD. And so if we're seeing the underlying metal getting more valuable and yet we're seeing net outflows from the ETF, in my opinion, what we're seeing there is redemption of shares. We're seeing these big banks are cashing in their shares, the authorized participants cashing in their shares and taking delivery of the metal, a run on physical in the ETFs. And then we got this one from Adam Media here. This guy's got a pretty big account. I am incredibly skeptical of this, but apparently there is more and more talk of this going around. So we have to address it here. Breaking: officials within the Trump administration have said that President Trump is considering returning the U.S. dollar back to the gold standard. This would allow U.S. currency to be directly exchanged for gold. This would be incredible, in my opinion, Adam is saying. Look, I agree. This would be incredible. And I'm also going to say there is a 0.0% chance. All right, we'll say 0.0001% chance that this actually happens. Look, the president is something of a loose cannon. He is unpredictable, and he's known to just kind of like shoot from the hip. But going back on the gold standard, look, guys, Donald Trump is an easy money guy. Donald Trump is a big asset guy. He's a big stock bubble guy. He wants to see asset prices endlessly rise. And currency debasement is the reason for that endless increase in asset prices in real estate and commercial real estate, of which his holdings are many. I really don't think he would do this. I'd love to see it. I think it would solve a lot of problems. If you think I'm kidding, check out a website called WTF Happened in 1971 and look at all the problems that we are facing as a society and how they all started getting a whole hell of a lot worse when President Nixon temporarily closed the gold window in order to defend the dollar against the speculators. All right, so I'd love to see it, but it ain't happening. And then we got this one in Bloomberg yesterday. Shout out to my moderator, Mish, who caught this one. South Korea's mint halts gold bar sales as supply tightens. Again, guys, this run on physical. Sometimes the silver squeeze you get is not the silver squeeze you were expecting. I mean, 2020's bingo. Who had the COMEX draining the Bank of England on their 2020's bingo card? Apparently, that is what's going on here. South Korea's mint has temporarily suspended sales of gold bars, adding to signs of widespread tightness across markets for physical precious metals. The Korea Minting and Security Printing Corp said it's facing problems with sourcing supply and managing demand, and that it will try to resume sales as soon as possible, according to a notice on its website. Trouble sourcing supply. The Korean Mint can't get gold. The move comes as traders worldwide rush to deliver bullion to the U.S. ahead of potential tariffs on the metal. Prices for gold on New York's COMEX have surged above international benchmarks, resulting in unprecedented tightness and record outflows from London vaults. See also a lorry in the bullion yard. All right, I think we have beaten gold to death this morning. Let's talk a little bit about inflation and CPI. All right, this one, big story of the morning. This is why markets are selling off. The inflation rate in the United States increased to 3% from 2.9%. All right, so look, guys, does this look like a chart? This is the monthly snapshot of the year-over-year headline inflation. We have now risen 4 months in a row from 2.4% back up to 3.0%. Let me know in the comments, guys. Does this look like a chart that is moving sustainably towards 2%? If you answered no, congratulations. You are correct. If you answered yes, well, then I've got a bridge I want to sell you. No, inflation is not moving sustainably towards 2%, not without a massive deflationary bust. And if they keep increasing the money supply, well, that's just not going to happen. Maybe things look better on a month-over-month basis. The consumer price index in the United States rose by 0.5% month-over-month in January, following a 0.4% increase in December, after exceeding expectations for a 0.3% advance. All right, another turn in the comments. What do you guys think? Does this look like a chart that is moving sustainably downward to any of you? So I'm seeing 1, 2, 3, 4 months in a row of accelerating inflation. Guys, keep in mind, these are the month-over-month numbers. When you see the month-over-month numbers accelerating, that means your year-over-year number next month and the month after that, they're going to start increasing as these lower numbers drop off from a year ago. So again, inflation, wrong direction, wrong way, Clyde. We're going the other way here. Maybe core inflation looks better. Core consumer prices in the United States increased 3.3% in January of 2025 over the same month. Let's see. Well, this one actually doesn't look quite as bad. It's not moving down, but at least it's not going up in a constant direction. I mean, we've been kind of flat between 3.2 and 3.3 since July here. I'm going to go ahead and call this one sticky. All right. This is inflation that is kind of stuck at 3.2, 3.3%. And the Fed seems very confident that this number is just going to come down on its own. Maybe eventually. In the meantime, a lot of people are really hurting, as you'll see in the freaking Kraft Heinz earnings. People can't afford freaking ketchup, but hey, it's the best economy ever. And on a month-over-month basis, core inflation in the U.S. increased 0.4% in January. That's up from 0.2% in December. Now, again, this one kind of sticky, doesn't show a lot of upward movement. Yeah, we're higher than we were a month ago, but we're kind of within the band of where we've been at for the last year or so. Core inflation is sticky. We are stuck here at this 3.3% range for core inflation. Meanwhile, headline inflation is moving higher in a big way. Now, let's take a look at the chart and where the inflation was. Here's your all items number, 3.0% year over year, 0.5% month over month. We had the food index was up by another 2.5%, higher than the Fed's arbitrary target, and it is accelerating. The food index was up 0.4% versus 0.3%. So that's the one right there. Food and shelter is what, and energy we'll say, is what hurts the working class and lower income households the most. And you'll find those are the categories that are seeing the most inflation here. The energy index rose 1.0% for the year, 1.1% for the month. Now, that is the second consecutive month of serious rises in the energy index, although it's down a little bit from last month. We were 2.4% month over month in December. We're still 1.1% here, but not quite as bad. Let's see, within the core numbers, here's your core headline number, 3.3% year over year, 0.4% for the month. Let's see, new vehicles were actually negative on a year over year basis. They were flat, 0.4 or 0.0% for the month. That's after 2 consecutive months of gains for new vehicles. So new vehicles are not really a huge source of inflation, at least not at this moment. New vehicles were a very big contributor in 22 and 23, to a lesser extent last year, but not really the big problem right now. We are seeing some upward movement, though, in used cars and trucks, 1.0% for the year, and a big 2.2% monthly move for used cars and trucks. So that's one to keep an eye on. Again, that's one that's going to hurt your lower income households a little bit more. The one oddity in a negative direction this month was apparel. We had a negative 1.4% move in apparel. Possibly some department stores are liquidating inventory following the holiday season, and that's what's contributing to that big negative monthly number, although it was still positive for the year. Clothes got a little bit cheaper last month. Let's see, shelter index 0.4% for the month. That is up from 0.3% the prior 2 months. So shelter just will not come down. Owner's equivalent rent will not come down. Still 4.4% year over year. We had a big surge in transportation services. That one was up 1.8% for the month, 8% for the year. That's things like your auto insurance and your airline fares. those are still getting more expensive. And last but not least, medical care services was flat for the month and up 2.7% for the year. Guys, inflation, it's just not going away. I mean, any way you look at it, I mean, that was some of the nuance that we had there. It's just really bad. That's the only way to put it. And the market is reacting appropriately, in my opinion, to this one today. Now, let's talk about a legal case that could have far-reaching implications for this stock market and this AI bubble. Check out this headline that Sam Altman really doesn't want you to see. Thomson Reuters wins AI copyright fair use ruling against one-time competitor. This is a pretty big one here, guys. A federal judge in Delaware on Tuesday said that a former competitor of Thomson Reuters was not permitted by U.S. copyright law to copy the information and technology company's content to build a competing artificial intelligence-based legal platform. U.S. Circuit Judge Stefanos Bibas's decision against defunct legal research firm Ross Intelligence marks the first U.S. ruling on a closely watched question of fair use in AI copyright litigation. So it turns out, according to this judge, that wholesale theft of intellectual property is wholesale theft of intellectual property. I can't believe we actually needed to go to court to get this ruling, but this is pretty obvious, guys. AI companies have been stealing artists, journalists, writers, musicians, filmmakers. They have been stealing everybody's work and creating AI models based off of that stolen work. They're monetizing those models without compensating the people who they're stealing their intellectual property to create these models. And this is the first judge to rule and say, no, you can't do that. You got to pay them if you're going to do that. Now, there are several such cases pending in court all over the country right now. We're probably going to see a lot more of these. Maybe these rulings all go in the same direction, which would be catastrophic for AI. My guess is we're going to see several diverging opinions from several different circuit courts, and this one will probably end up in the Supreme Court eventually. But this was a big setback for the AI companies. You can't just steal everybody's work. All right, let's talk a little bit about some corporate earnings that we got today. Kraft Heinz wraps up a challenging year with a profit warning. The company's revenue falls short of Wall Street estimates as price increases were met with lower sales. Price increases and lower sales, guys, that's the takeaway. The company said it faced unfavorable currency mixes, a slight loss in sales from businesses that it sold, and a decline in sales volumes, even as prices increased by 1.4%. For the fourth quarter, Kraft Heinz revenue dropped 4.1%. So they raised prices by about 1.5%, and their revenue fell by about 4%. The solution to higher prices is higher prices. Kraft Heinz also cited continued shifts in consumer behavior due to economic uncertainty, as well as a drop in its Lunchables packaged sandwiches and snacks. Look, Lunchables, that's kind of a luxury for lazy parents. If you want to overpay for 35 cents worth of stale lunch meat and crackers, people probably can't afford to do that now. Instead of just throwing a Lunchables in the kid's backpack, you actually got to make the kids lunch or buy lunch at school. That's not too surprising, but continued shifts in consumer behavior from a ketchup company. Let's just take a moment to appreciate how bad that is. People are so hurting that they're buying less ketchup. All right. And that's why you've got all these bad vibes. Remember that stupid talking point, the vibe session from last year? Remember that silly, mostly politically motivated talking point about how the problem is the poor people just don't understand how good they have it? Well, maybe the reason why the poor people don't understand how good they have it is because they can't afford to put ketchup on their freaking hot dogs. Just maybe that's contributing to the vibe session. I just throw them out there. You guys do what you want with them. The Kraft Heinz company is down 7%. The opening bell has run. The stock is down 5.7% here. It was down 7% pre-market at one point. Last one, I'm going to blow through this one pretty quick. CVS stock soars after a big profit beat and continued improvement in the PBM business. That's pharmacy benefits managers. That's their middlemen that are supposed to be negotiating on your behalf for cheaper drug prices. But really, it's just become another method to extract even more wealth from you using your medicine as leverage against you. CVS, they've been pretty hurting over the last year or so. They've been taking a lot of heat for their PBM business. The stock is way down over the last year or so, but it's recovering a lot of that here this morning. They're showing some signs of a turnaround in that PBM business. And so they posted earnings that beat expectations, even though they were down for the year. CVS stock is up almost 12% here, trading at $61.50. That's up 11.5%. And I just want to say thank you. Whoa, 15 of them. You guys have been busy this morning. Thank you. Mr. Snowman says, congratulations on your B-Day, Jack. Somebody let it slip in the comments. Who was it? It's the same day as mine. Keep up the good work. Well, happy birthday, Snowman. You frosty SOB you. I hope you have an excellent birthday. And thank you, sir, for the super chat and support of the channel. Thanks to my brother, Mish, the mod. Thank you, Mish, for being a member for 12 months. He says, happy birthday, Jack. Joyeux. And, oh, man, are you going to make me do French? I can't speak French, Mish. Joyeux anniversaire à toi. Gesundheit. Did I pronounce that? How's my non-regional diction? Sorry, guys. I'll work on my French, all right? It's a work in progress. Thank you, Mish, for everything you do for the channel and for the good vibes, as well as M&J, my fellow mod. Thank you, M&J says, happy birthday to Jack. Throwing a Mel in there. Thank you, M&J, for the good vibes and for everything you do for the channel as well. Ian Ross, happy birthday, Jack. Hope you have a great day. Thank you, sir. I will. Appreciate the super chat. And thank you for being a melonhead for 6 months. Armando Reyes, what's going on, brother? He says inflation isn't that bad. We have money to burn, like the $53 million FEMA sent to pay for illegal immigrants. I don't know about the 53. I saw the number was, I think, 59 million was that lady got fired for yesterday when she violated the executive order and sent $59 million to house migrants at a luxury hotel in New York. Interesting, that hotel charges something like $700 a night. $700. Isn't that the same amount of money that they gave to the people who lost their house in North Carolina? Interesting. I don't know. Well, hey, man, your tax dollars at work. What can I say? Look, all I can say is with what's going on with the spending freezes and the spending cuts and these silly judge rulings, which side do you want to be on? There are people who, for the first time in years, all right, look, say what you want about Mr. Orange, say what you want about Elon Musk. There are things I like and dislike about both guys. They are the only people in my lifetime, outside of Bill Clinton, who downsized the military. I'll throw that one in there. But they are the only people in my lifetime who have made any legitimate effort to reduce spending. And the left is hyperventilating about it. Oh, my God, they're not going to pay for Alphabet-inspired comic strips in Peru. Oh, my God, my U.S. aid. The things that they're spending money on, $50 million for condoms in Mozambique. Maybe, just maybe, that's not the best allocation of our taxes, considering that we're $36 trillion in debt. I'm sure, hey, look, you want to contain the spread of STDs. It's a noble pursuit. I get it. Don't force me to pay for it. All right. We are trillions in debt and getting worse. The reason why people can't afford freaking Kraft Heinz ketchup, like we were just talking about, is because of inflation. And one of the biggest causes of inflation is the Federal Reserve monetizing Congress's runaway debt spending. So we got to stop burning this money. Thank you, Armando, for pointing out one of many examples of where that money is being burned. Appreciate the super chat and the support of the channel, sir. And by the way, yes, guys, budget cuts are painful. I am not saying they won't hurt. They're going to hurt. They're going to hurt a lot of people. And it has to happen. Alex L., what's going on, brother? He says, 12-month milestone for being a melonhead. Thank you very much, sir, for everything you do for the channel. You, sir, are freaking awesome. Thank you, Alex. And Hunt and Cover, thank you for supporting the channel. Inflation. Here's a box of Little Debbie birthday cakes. You know, Little Debbie's used to go for a lot less than 20 bucks. I remember I could get those things for the leftover change when I was buying lunch in high school. They were like 25 cents, 30 cents. But yeah, don't worry, guys. Inflation is moving sustainably towards our 2% target. Thank you very much for supporting the channel, Hunt and Cover. You are awesome, sir. Appreciate the good vibes. JJ Watt says, anyone else starting to pick up Zimbabwe $100 trillion vibes from the USA, asking for an ex-rando friend? You know, I mentioned this the other day. I think I said Nigeria. I meant Zimbabwe. When the story about the penny going away came out, like, look, paying 3 cents to make a 1 cent coin does not make sense. So the penny should go away. It is a waste of money to mint pennies. And look, pennies have a funny way of falling out of circulation. Most people walk by them in the street and don't bother to pick them up. So it is wasted money. Excuse me, guys. But when we are not printing pennies anymore, that is a step in the direction of that $100 trillion Zimbabwe banknote. Now, it's still a long way off, right? Not minting pennies is a far cry from the $100 trillion banknote. But let's not forget, we have people, in positions of relative authority with loud voices who just a few months ago were advocating for minting $1 trillion coin to solve budget problems. So we could keep spending the $600,000 for an alphabetical comic strip in Peru. And so we could keep spending $50 million for condoms in Mozambique. People wanted to freaking mint $1 trillion coin in order to pay for that kind of crap instead of cutting spending. So yeah, we are getting that Zimbabwe vibe here. We're still a long ways off, but I think we're a lot closer to that than most people realize. And if you're hyperventilating over a little bitty cut to U.S. aid, well, you better get used to breathing into a paper bag, buddy, because there are more spending cuts coming. They are going to get bigger, and they're going to hurt a hell of a lot more than U.S. aid. Suck it up. We're broke. We're $36 trillion in debt. We cannot keep stealing from our great grandkids to pay for this stupid crap. Thank you, JJ Watt, for supporting the channel. Spud Ruckus. I love that name. Could you describe the Ruckus, please? What movie? Let me know in the comments. Happy birthday, Jack. Thank you, Spud Ruckus. You chaotic potato, you. I don't even know what is there a Spud Ruckus joke in there somewhere? I don't know. Thank you, Spud. Appreciate the super chat, bud. Thank you for being a melonhead. Mark Fragola says, no amount of spending cuts that Doge makes can save the financial system. Derivatives will melt down regardless. Interesting, Mark. Spending cuts could actually result in the derivatives meltdown. And you could argue that derivatives meltdown needs to happen, because the thing about this derivatives market and this ridiculously bloated, hyperinflating, over-financialization, it is dependent on a constantly expanding money supply and a constantly growing national debt in order to finance that ever-growing asset bubble that is largely at the expense of the average person, resulting in this massive wealth gap that we have. And so it's not that Doge can save the financial system and the derivatives bubble. Doge may be the pin that we desperately need to pop that derivatives bubble and stop this over-financialization and endless increase in asset prices that has resulted in, over the last 50 years, two parents need to work full-time to achieve a standard of living below what one parent working 50 years ago used to be able to afford. And so that bubble needs to pop. Yes, it's going to be painful. Yes, it's going to hurt a lot of people, but our current system is hurting a lot of people and will continue to do so until something changes. Thank you, Mark Fragola. Appreciate the super chat. And thank you, Wangler. Whoa, a purple one. Thank you, Mr. Wangler. He says, thank you so much, Jack. Happy birthday. No, Wangler, thank you so much. I appreciate the good vibes and the generosity. Thank you very much. Happy birthday to me. And the beekeeper. Whoa, a red one. Purple ones, red ones. Oh, my. Thank you, beekeeper. Wow. Appreciate the generosity, sir. That is very kind of you. He says, happy birthday, Jack. Happy birthday, Earth Day, Jack. Ice cream, cake, and coffee for all. All right, guys. Cake and coffee on the beekeeper. Thank you very much, my friend. That was very generous of you. I appreciate the good vibes. Evan Kairos. Evan K. Thank you, Evan K. He says, we need a reel of impersonations. He likes my Nixon. He's missing my Janet. I don't even think I could do Janet. Can I do Janet with my voice right now? I guess I could. I had pneumonia last week, so my yelling is probably a little rusty. And I am going to be hacking up a lung just as soon as this stream is over from stressing my vocal cords to bring Janet out of retirement. Now, if you'll excuse me, I'm going to go cough on my way to collect speaking fees. And the Nixon, my Nixon is a work in progress. I'll work on that one too. But I got to do something with Yellen gone. Scott Besson is just not, he's just a boring guy. He's not as exciting. There's no Besson impression in the works, guys. Sorry, he's just boring. But I don't know. There's enough cast of characters in the Trump admin. Maybe we could find somebody to impersonate in there. Keep an ear to the ground. Thank you, Evan. Alex L. says, happy birthday, Jack. Thank you, Alex, so much for the generosity. Once again, you are awesome, sir. Really appreciate everything you have done for the channel over the last year or so. Thank you, sir. Appreciate that very much. And the good vibes. And Will Yang says, will you take your kids to watch Neza 2? I didn't take my kids to watch Neza 1, so Neza heard of it. So not really sure which one that is. I don't know what Neza 2 is. Help me out, guys. What's a Neza 2? Gesundheit. And I guess if you got to watch your Nezas in order, whatever a Neza is. So I don't know. Maybe I'll check out Neza 1 and then get back to you on that one. You got me there, guys. What's a Neza? Sorry. Never heard of the guy. Atomic Coyote, thanks again, by the way. Was that Will Yang? Thank you, Will Yang. I appreciate that. Atomic Coyote says, buy yourself some tea and honey. Stay safe from the mystery flu that is going around. Yes, the latest and greatest innovation from those minds at the Wuhan Institute of Virology. They're sharing their work with us once again, free of charge. Aren't they generous? By the way, also paid for by your tax dollars. Yeah, guys, if we cut spending, who's going to pay for the plagues? I mean, won't somebody please just stop this madness? I mean, someone's got to pay for the plagues. It might as well be us. Yeah, I'll buy myself some tea and honey. Local honey, by the way. I like my local honey. Thank you very much, Atomic Coyote. I appreciate the super chat and support of the channel. Becky Heffernan says, Jack, I hope you have a blessed and wonderful day. Thank you for all you do to keep us properly and logically informed. Well, I don't know how proper I am, but I try to use logic, Becky. Can I do improper and logically? I mean, I don't know. I try to be a little improper every now and then. Life gets boring when there's too much propriety involved. That being said, I cannot stomach thieves and crooks. And by the way, I was looking at, speaking of thieves and crooks, I was looking at AMMJ stock the other day. That's American Cannabis Company. Remember, that was the company that was merging with Hyperscale Nexus. I don't know why I just went here. That stock is down 99% since the day I made that video. It has basically gone to zero. So call that a win for the good guys. What can I say? The merger fell apart and the stock is now worthless. Those crooks lost every dollar they tried to steal. Bye-bye. Thank you, Becky Heffernan, for supporting the channel. Sorry about the tangent there, by the way. And Lisa B, happy birthday, Jack. Thank you so much, Lisa. Guys, I appreciate all the good vibes. You guys are awesome. Thank you so much. And Nashville Pasta Man says, Kool-Aid water fountains for North Korean accountants. Don't make me laugh, Pasta Man. It hurts. I saw that video. I got to share that on my Twitter feed. Pasta Man sent me a Twitter video. It was like Freedom Tunes or something. These guys have done a couple of videos over the years. They did one about the Federal Reserve that was really good, and about the banking clans and the creation and basically the story of the creature from Jekyll Island. But they did a video about cutting the U.S. aid spending. And one of the programs that they were cutting was Kool-Aid water fountains for North Korean accountants. I mean, look, if you guys feel like you don't think North Korean accountants deserve a Kool-Aid water fountain, then tell me, how long have you hated Korean people? Do you just hate Asians? Is that why you want to cut funding for North Korean Kool-Aid fountains for accountants? They all rhymed, by the way. That was a hilarious video, Possum Man. I'll share that one on my Twitter feed just as soon as I track that one down. Thank you, sir, for everything you do for the channel and for the laugh. Although I got to admit, it still hurts to laugh, bud. So that one hurt. Man, don't make me laugh, guys. It really hurts. All right. Uncle Fedster, last but not least, says happy. Nope, it's not the last one. You guys are sneaking them in at the end. Just when I think I'm out, they pull me back in. Uncle Fedster says happy birthday, Jack. Thank you, Fedster, for the good vibes. I really appreciate the generosity. You guys are all awesome. Thank you to my many, many melon heads out there. And the Cuban Enforcer. Neza 2 is the highest grossing animation film in history? I have never heard of this movie. What is Neza 2? I never even heard of Neza. Moana made a bunch of money. Like Disney made money on Moana 2. My kids watch Moana 2 all the time. I've never heard of this. I got to go check this one out. Was this even released in the U.S.? Is this like I don't know, was it made by a foreign studio or something? And maybe they did it for like $20 while Disney dropped $80 billion on their latest politically motivated slop and lost money on it. But Neza 2, highest grossing animation film in history. I got to go look this one up, guys. I've never heard of it. And again, the 2 would suggest that there was a Neza 1 at some point. So, all right, guys, I'm going to go check that one out. But I can't weigh in on it because I haven't seen it. So I will reserve judgment. It says it's an AI movie. Oh, no, not an AI movie. All right. Get used to AI in movies, guys. AI is going to be spitting out movies like crazy soon, and everybody's going to have melty faces and long twisted fingers. It's going to be great. You're going to love it. Love what you've done with the internet, AI. Keep up the good work. All right, guys, that was a long one. Thank you so much for all the generosity and the good birthday vibes. You guys are awesome. I appreciate that very much. Inflation is back. It's moving in the wrong direction, and it ain't going away. Better have some shiny. I don't know what's going on with gold, but we will keep you guys informed. Thank you so much for all the super chats and the birthday wishes. Special shout out to my magnanimous melonheads on Patreon and YouTube. You guys rock. Links down below should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.